Hey guys, welcome back to another video. Today I wanted to talk about how you could have consistent green days by using multiple time frames. It doesn't matter if it's in the morning, in the afternoon. You know, this goes back to what I've said about stocks being like waves. Yes, volume is important, but you could easily predict price fluctuation and which direction it's going to go just based on the technical setup for that stock, again by using multiple time frames. So today I traded ticker symbol SNSS around 3 o'clock, and I used about 2 or 3 time frames to confirm the probability of it making a bullish move, and that's exactly what happened. So before I tell you exactly how I took my trade, the very first thing I did was draw out key support and resistance levels. So pre-market I noticed this candlestick right away on the 5-minute chart. So I was sure to draw out a resistance level right here around this 550 area, and you could see there was a bounce here, a bounce here. Then obviously this became resistance as well too, as it made its move down. So you can clearly tell that there's more than 2 to 3 points where the stock is either being rejected or bounced. So a couple others are, let's look at this pre-market rejection right here around 510. So draw a line right there. We could also see that, you know, once it broke through it, resistance becomes support, and you could see that the stock bounced around this 510 area throughout the rest of the day. So that's also a good level that we could use. So using these 2 points around 3 o'clock, let me zoom in real fast. I was watching the stock very carefully when obviously this candlestick right here was very bullish. I waited, and whenever this reversal signal comes, I'm very mindful of checking multiple time frames to confirm a trade, because this reversal signal is very strong as long as you're using it on time frames of 3 minutes or longer. And again, this was obviously the 5-minute chart. And so then what I did after the 5-minute chart was switch over to the 15-minute chart. Zoom in again. So when I took the trade, it was before this candlestick right here. So I'm going to zoom in like this. Oh, that's a little too distracting. Okay, so that's better. So at one point, this candlestick broke through the support level, right? But we reestablished the support level when this candlestick right here closed above it. And typically, I've noticed for the most part, stocks are like waves, but it doesn't typically go in one direction and then right away the next. Usually you'll see some kind of form of consolidation, like a higher low or a lower high, depending on which, you know, if you're bearish or bullish. And the proper thing to do is wait for a pullback, which is exactly what happened here on the 15-minute chart. This is a prime example right here where, you know, we reestablished support and then we waited for a proper pullback right here. And I got in around 510, you know, 510, 515. And my first target was going to be this level right here, which is the earlier support / resistant level that we drew out because of this pre-market area. And again, it establishes a point right here, you know, even a bit right here. So, you know, these are very good 2 lines that we could use to make our entries. And I actually ended up just taking out the entire position around the 550 area, 545 area. And I did that by establishing 2 time frames, the 15-minute and the 5-minute. I even looked at the 30-minute actually. Let's take a look at that. So let's see, around 3 o'clock, that's 2:30, this is 3 o'clock. So this candlestick, 30-minute candlestick, turned green. And, you know, you could see that there was a bit of a fight between the bears and the bulls, but it turns out that the bulls, you know, won that fight with the 30-minute candle ultimately turning green. And typically when you see a green candlestick like this flirting around the support level, more times than none, you're going to definitely see a bullish move up. And so using the 5 minute, the 10 minute, and the 5 minute, the 15 minute, the 30 minute time frames, I was very confident in my trade. We could take a look at another stock that I didn't trade, to sort of establish the same example. Let's go back to the 5 minute. So this is ticker symbol NVOS. This had a very good run this morning to all the way to $42, and this is the kind of range you want to look for, because you probably know even if it's going to sell off at some point, it is going to bounce back up, and this is a very good bullish move. And a way you could establish this bounce is to look for multiple points off of a support level. So this is a perfect example right here. You can automatically notice how there's so many like 5 minute candlesticks bouncing off this sort of $6 level, or about $6 level. So I could draw a line right here, and again, the reversal signal came on right here, which would be a good entry. Very low risk, high reward. You can switch over to a 15 minute chart, and yeah, this is also 2 candlesticks in the 15 minute chart bouncing off this 585 area. And if obviously any of the candlesticks went below the prior one, that'd be probably a good stop loss to get out of your position. Again, low risk versus high reward, and obviously the reward was significantly higher, and if you were in this trade, you made some good money. But anyways, that does it for this video. If you like this video, go ahead and hit the like button. Consider subscribing to the channel for more content like this, and I'll definitely be sure to make more candlestick videos and give you guys some tips and tricks regarding that on Thinkorswim. But other than that, take care and have a nice day. Bye.